Asian equities as an asset class. So far so good, but does it have the steam to go even higher?
Yeah, Asian equities still look to us like a pretty good play on both the recovery and global demand growth underway, and I think really principally with the U.S. economy as a critical driver there, Asia giving you a lot of leverage on that pickup in U.S. demand through the export sector, but still with a fair amount of value to be found in the region, and at the same time at least the potential backstop of Chinese demand growth as well.
What are you expecting from the Fed meeting this week? Do you see any kind of danger to rotation rally if indeed the noise of a QE3 exit becomes louder?
This is probably going to be a relatively inconsequential Fed meeting in the sense that we certainly don't expect any major changes to their forward guidance. I think that Chairman Bernanke probably felt a little stung by the market response to the January Fed minutes that were released about a month ago, 3 weeks ago, in so much as even a relatively sort of indecisive suggestion that the FOMC was not foursquare behind sort of keeping QE in place for as long as it is blueprinted for, was actually a major shocker to markets and tipped off quite a bit of volatility in the near term. With that experience still pretty fresh in his mind, we think that the Fed chairman is going to try pretty hard to maintain a message of continuity in monetary policy. And as such, we're likely to see very little more than perhaps a bit more elaboration on the issue of the costs versus the benefits of QE, but one that clearly resolves in favor of the benefits still being by far the more important consideration for the time being.
What about China? Is that a bigger worry than the U.S. sequester and the political deadlock in Italy?
We do think that China is the bigger uncertainty. Now, that doesn't necessarily mean that China becomes a bigger negative, but in terms of what markets at this point I think can safely bake in to equity valuations, China is the one that still at this point is probably the least clear. And what I mean by that is that we have a new administration in place since November of last year. The details of their policy agenda were only really fleshed out over the past week and a half at the National People's Congress, and it still leaves open the question of implementation. Just how serious is the new administration about pushing ahead with key elements of their agenda? And for that matter, how much political capital, how much wherewithal do they have to actually achieve that agenda? And until we get better clarity on the policy outlook in China, that's going to remain a pretty key uncertainty for the broader financial marketplace.
With a new governor for Japan coming in, does this increase the risk of a currency war?
I really think that this talk of currency war with regards to Japan is a bit of a misnomer. Clearly, a more reflationary monetary policy by the BOJ does have some weakening impact on the yen. But as the outgoing governor Shirakawa himself said in recent weeks, the BOJ's objective here is not specifically to weaken the currency. Their objective is to reflate the domestic economy. And if the reflation of Japan's domestic economy should have the side effect of causing some yen weakness, well, that is just a side effect. And certainly when Japan was not reflating and not expanding its balance sheet, its central bank balance sheet, as aggressively as were the ECB, the Fed, and the Bank of England over most of the past 5 or 6 years, it was causing the yen to appreciate against major currencies in a very unhelpful way. So what we have to think about in terms of Japan is really more a reflationary monetary policy rather than a sort of just a deliberate attempt to steal growth from their export competitors through a kind of a beggar thy neighbor policy. I don't think we're looking at that at all. And it's important to remember that Japan's economy, like the U.S. economy, is 2/3, if not slightly more than that, domestic private consumption. And therefore, getting that domestic economy back under a more reflationary mode again is going to be very important to raising overall growth rates. And that could be good even for Japan's trade competitors.